are now live.
Good afternoon, everyone, and thank you for joining us today for this discussion around the Payroll Protection Program in the CARES Act, and particularly how it affects the self-employed. This section is brought to you by the MSBA Taxation section, and it is the second in as many weeks that the tax section has organized. We're very grateful for their efforts. I'm Andrea Terry, the Director of Learning for the MSBA, and I'd like to thank the tax section and Glenn Frost of Frost Law and his team of attorneys who've contributed their time and knowledge on these webinars. Today, we have Rebecca Shepard and Peter Hokibo with Frost Law presenting. And if you have questions during the session, please email them to crisel@msba.org, the email address that you see at the bottom of your screen. And your faculty today will do their best to get to as many of them as possible with answers. We thank you again for taking the time to join us today. And I'll turn the program over at this point to Rebecca and Peter. Thank you.
Thank you, Andrea. We're happy to be here. Oh, there we go. So today we're doing an update on the PPP plan. I know there was a presentation last week that went through the particulars of that program. We want to do a recap of that as well as give some updates for the guidance keeps changing like every day. So just to make sure that everyone's staying on top of that. You go to the, there. The first thing we wanted to discuss was the Economic Injury Disaster Loan, which is the EIDL. And EIDL grants provide eligibility to include tribal businesses, cooperatives, ESOPs with fewer than 500 employees, or any individual operating as a sole proprietor or an independent contractor during the period between January 31st, 2020 to December 31st of 2020. Nonprofits are also eligible. EIDLs provide eligible businesses no more than $2 million in loans and requires that the SBA EIDL made in response to COVID-19 before December 31st, 2020. The SBA will waive personal guarantee on advances on loans below $200,000. Obviously, this is a huge benefit to a lot of companies where before they were having to personally guarantee these loans. The requirement is that an applicant needs to have been in business for 1 year prior to the disaster. SBA will approve loans based on the applicant's credit score. Part of the EIDL program, everyone was really excited about an emergency grant that you were supposed to receive within 3 days of applying, which is not the case. I don't know. I think I've anecdotally heard of one person getting their $10,000, but most of what I hear at least is that people have applied and are just still waiting to hear from the SBA regarding their emergency grant. At first blush, we believed that it was going to be a full $10,000 emergency grant, regardless of the size of the company. But due to the popularity of the program, the SBA is now limiting that amount of the grant that businesses can receive to $1,000 per employee, up to $10,000. So if you have 5 employees, then your maximum grant would be $5,000. Anecdotally, the only person I know who received their EIDL money actually got $10,000. And is one employee. So take that as you will. Whether, how things are getting processed and the applicants. I know she was one of the first to apply. So who can apply for an EIDL? You can be approved if you are a U.S. business with fewer than 500 employees, operate as a sole proprietor or an independent contractor during the covered period, which they bumped back to January 31, 2020. Throughout this year to December 31st, 2020. You're a 501c, 501d, or 501e private nonprofit, and you can prove substantial economic injury caused by COVID-19. So one thing to kind of keep in mind is that if you are already struggling prior to this disaster, you may have a problem with eligibility. And that would be something you would want to kind of discuss with somebody as far as your application is concerned, whether or not you would apply, or what factors present the fact that you think that you would be a good candidate for this program. So the interest rates and repayment, payments are deferred for a period of 1 year. There's a collateral requirement for loans over $25,000. The whole repayment period is 30 years, and the interest rate is 3.75%, and then 2.75 for nonprofits. So the other big program, obviously, is the Paycheck Protection Program. It's the one that people are most talking about as far as helping small business and making sure that you're able to keep your employees like throughout this period of time. On April 3rd, the application process began for companies that had payroll. And then on April 10th, the application process opened for sole proprietors and independent contractors to submit applications, which was the main reason and the drive for giving this webinar so close to the last PPP update from our colleagues. And we were waiting for guidance coming out regarding that launch of the program, and the guidance just has not come. And so we're going to give you the best advice we can based on the information that we know, but most likely you're going to see Peter and I again in about a week or 2 weeks or some point, hopefully, when guidance has been issued, and we can give you more information regarding the sole proprietors and independent contractors. But the application process is live. It is important that if you believe that you're a good candidate for this program, that you apply. Funds are limited, and so it's a lot of people are making sure that they're in that queue to be able to receive those funds. So just a little bit of background about the PPP program. PPP provides an incentive for companies to continue to keep their employees working during this period. The PPP provides $349 billion in loans by banks in order to help small businesses. These loans are potentially forgivable, which is what makes them so attractive, or one of the reasons that makes them so attractive, and will help maintain payroll, rent, health benefits, utilities, and other expenses. As I said just a moment ago, there's limited funds available for this program, but as we know, Congress is currently trying to get more funds appropriated for this program due to its popularity, and because it's just been there just is not enough funds available to help all the small businesses as of right now. So eligible entities, small business concerns, businesses that qualify under the Business Interruption Loan Program as permitted under the SBA's Table of Small Business Size Standards. Most businesses to be able to apply have to be under 500 employees, but there are a few other exceptions. So businesses, most nonprofit organizations, veterans organizations, and tribal businesses that each employ 500 employees or less, or if higher than the maximum number specified for the type of business in the SBA's Table of Small Business Size. If you think that it's possible that you might qualify, you can give us a call and we can quickly check and see if your more than 500 employee business would qualify for PPP. Hotels and restaurants, hotels, casinos, restaurants, and other food service providers that have no more than 500 employees per location will also qualify. So this is obviously, like I said previously, is the drive for today. So sole proprietors, independent contractors, and self-employed individuals under Section 7002B of the Families First Coronavirus Response Act, individuals who operate as sole proprietors, independent contractors, and self-employed. Veterans organizations described by Section 501c3 of the Internal Revenue Code that are exempt from taxation under Section 501A, and tribal business concerns, organizations owned in full or partly owned by an Indian tribal group.
All right.
So this is, I'm going to kick it over to Peter. He's going to talk about the forgiveness aspect of the PPP.
Yeah, so first let's dig in a little bit on the loan formula and the mechanics of it, and we'll sort of start at a high level and work our way down to the nitty gritty. So first point is the maximum loan amount is $10 million, and it is a $10 million loan, or the average total monthly payments for payroll cost incurred during the 1-year period prior to the loan date and is multiplied by 2.5. So basically 2.5 times your monthly payroll cost. And we won't get into it right now, but in successive slides here, we'll get into what exactly is a payroll cost, what isn't, and why that's important to you. It is worth noting here that you can basically refinance an EIDL loan that we were talking about previously into your PPP that would allow you to benefit from a lower interest rate. So you'd be refinancing down from a 3.75% rate down to a 1% rate. Payments are deferred under the PPP for the first 6 months. And again, the rate on these loans is 1%. All right, so I said we'd dig in a little bit on what payroll costs mean, because this is critically important in this area. So the sum of payments of any compensation with respect to employees, that is a salary, wage, commission, or similar compensation, payment of a cash tip or equivalent, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payments required under a group healthcare plan, including insurance premiums, including, and this is important, any retirement benefit, and it also includes payment of state and local taxes. Below is section BB. This is what it specifically does not include, and that is the sum of payments of any compensation to or income of sole proprietor, independent contractor, that's a wage commission. This was causing some confusion here, and so I think we've addressed it also in later slides, but what's important to know here is that payments to independent contractors by a company are not going to be included in payroll cost, and that is because these folks can apply on their own, and what Rebecca was speaking of earlier was the difference between the April 3rd PPP launch and the April 10th PPP launch, the first being for employers and the latter being for independent contractors and sole proprietors. Okay, and then so there are specific items that are not included. First is the compensation of an individual in excess of $100,000, and we'll dig in a little bit more there as well. Really important here is taxes imposed or withheld under chapters 21, 22, or 24 of the Internal Revenue Code. Chapter 21 is dealing with FICA taxes. 22 deals with railroad related taxes, and 24 is related to withholding. And so we'll dig in there a little bit and unpack exactly what's transpired between the code, the legislation, and then the subsequent guidance and regulations that have come out. Also really important, doesn't include any compensation of an employee whose principal place of residence is outside of the United States. And then these last two are just making sure you're not double dipping on other available programs that have come out of this new coronavirus age. All right, so Rebecca said earlier, we were really hoping that we would have had guidance from the SBA to be able to provide a little bit more information to those who are sole proprietors, independent contractors. There's a third one on here that's really important, that's partnerships. So what we're expecting is some sort of guidance that says to the effect that you can apply for this PPP loan as long as your earnings are subject to self-employment tax. Net earnings from self-employment are counted as payroll costs, and so that's what we expect to see. And I guess we can talk through some of those, how that might work with, in a partnership situation versus how that might look in a S-corp situation, because I think they're going to be treated a little bit differently, but we can get into some of that a little bit later. So a couple of questions just to really drive home the point on some of these. So question, the CARES Act excludes from the definition of payroll cost any employee compensation in excess of an annual salary of $100,000. Does that exclusion apply to all employee benefits of monetary value? The answer is emphatically no. The exclusion from compensation applies only to the salary and the wage portion of it. So there are additional benefits that employers pay that they can include in their payroll cost, and that includes employer contributions to defined benefit and defined contribution retirement plans. It includes payments for the provision of employee health benefits, again, group health, including insurance premiums, and again, also includes payment of state and local taxes. So another very important one. How should a borrower account for federal taxes when determining its payroll cost for purposes of the maximum loan amount allowable uses of a PPP loan, the amount of the loan that may be forgiven? So answer, this goes back to reference to the particular sections of the Internal Revenue Code. Payroll costs are not reduced by taxes imposed on an employee. Again, payroll costs are not reduced by taxes imposed on an employee. So the employee portion of FICA and withholding is not going to reduce your payroll cost. What are reduced, payroll costs do not include the employer's share of the payroll tax. So the employer's portion of FICA is not counted. As an example, an employee who earned $4,000 per month in gross wage, where $500 in federal taxes was withheld, count as $4,000 in payroll cost. The employee receives $3,500 and $500 is paid to the federal government. However, the employer side, federal payroll taxes imposed on the $4,000 in wages are excluded from the payroll cost. So very important when you go to make these applications that you're computing this correctly and not including your employer portion of the FICA taxes. So time period used. So this refers to the look back period to try to determine what your average monthly payroll cost is. There are really two ways that this has been done, and you should do whatever benefits you. So some banks may be asking for calendar year 2019. You can also use a rolling 12 months. This was specifically addressed in an FAQ posted back on April 6th, that you can do whichever one benefits you. There are additional calculations for seasonal businesses where the look back would be February 15th, 2019 to March 1st, to June 30th, 19. In the alternative, if the business wasn't in operation, you can use the first 2 months of 2020 for the analysis.
And Peter, that was actually one of the questions we just got is, what if a company is less than a year old and this doesn't have a year of payroll data? And so Peter just answered that right there. You just use the first 2 months of 2020 to determine your average.
Sure, and the only other thing to add there is that the business needed to be in operation on February the 15th. So the look back for a new business is going to be the first 2 months, but it needed to be in operation by February 15th. All right, so now we're getting into, the most important part of this program is eventually these employers or the self-employed independent contractors are going to want to go and try to have the loan forgiven. And there are some exceptions that folks need to be really cued in on as they're going about their business. So the disbursement of the loan is starting a clock, and it's an 8-week period, commonly referred to in this legislation as a covered period, that begins when the funds are transmitted. And so there's two possible ways that loan forgiveness is reduced. One is based on a reduction of the number of employees. And the second is based on a reduction in wage. So the reduction based on the number of employees, and Bill, maybe go ahead to the next slide, is a full-time equivalent analysis. And there's, what is the calculation for this? This is not a FTE calculation under ACA or any sort of specialized FTE calculation. So the formula really is, what is the employer's full-time hours? In Maryland, that's typically 40 hours a week, versus what is the employee's scheduled hours. And, a full-time employee is 1, and someone who's working less than full-time is going to be less than 1. Bill, can you go to the next slide? Maybe the next one. All right, I'm not sure. So there's there we go. Yeah, right there. So no, that's not it either. Okay, so for the reduction in FTE, the test period is going to be February 15th, 2019 to June 30th, 2019. So a year ago. What was your FTE calculation then? And then what is your FTE calculation for the 8 weeks following the disbursement of your loan? Okay. The alternative, if you weren't in operation for the FTE, is that you can do the first 2 months of 2020. And actually, the language of the CARES Act actually says that it's at the employer's discretion. So if using that first 2 months of 2020 benefits you, use that. Otherwise, you're using, again, February of 19 to June of 19. Bill, it might be a little bit out of order, but can we go to the example? Yeah, okay, FTE example. So just something simple. A restaurant is owned by Alfred and Brian. Carol, Dana, Eddie, and Frank worked for them. Before the COVID-19 crisis, Alfred, Brian, and Carol worked full-time. The rest worked 25, 35, and 15 hours per week. So there along the left side, you can see what the pre-PPP FTE is. The full-time folks are 1. The part-time folks are less than 1. It gives you an FTE of 4.875. After the COVID crisis began, Alfred and Brian continued to work full-time, but they cut Carol's hours by half. Darla and Eddie were able to work 15 hours a week, but Frank was furloughed. And you can see here where it's dropping that FTE down to 3.25. And now you're comparing that, the 8-week look back, the 3.25 with the February 2019 amount of 4.875, and you're getting 2/3. So right off the bat, this company is only eligible for 2/3 of its loan to be forgiven. So as you as employers are thinking about furloughing employees or cutting payroll, or hours, potentially some very important stuff on the back end here when you go to do loan forgiveness. Okay, so the other option, or the other regime to reduce loan forgiveness is a reduction in salary and wages. Forgiveness is reduced if an employee's, and not just, it's any employee. So if any 1 or more employees' wages are reduced by more than 25%. The comparison period here is still that 8-week covered period following the disbursement of the loan. But in this situation, you're comparing it to the average of the full quarter during which the employee was employed, the most recent full quarter. So for most of us, it's going to be Q1 of 2020 that you're going to be comparing that comparing the 8-week period following. Forgiveness is reduced by the amount in excess of 25%. So basically it's saying you can reduce salaries up to 25%, but you will be penalized for going further. Employees earning an annualized rate of $100,000 or more during any pay period in 2019 are not considered. So continuing that policy of protecting those or being more keyed into those earning less than $100,000 continues in this part. Yeah, now I'm forgetting. Some of this may be repetitive. Okay, I think we're good. Rebecca, you want to take it from there?
You're muted, Rebecca. Rebecca, your mic's muted.
Sorry, I'm not used to webinars. What I think is that everyone's in a rush to apply right now, but what's really going to be important is once these funds actually get distributed, and I know there's a lag between applying at the bank, getting it submitted to the SBA, and then actually getting funds. But once people actually get these funds, making sure that you're getting every dollar possible to be forgiven and thinking about different scenarios as far as FTE and hours and things like that. It's really important to make sure you're thinking about it carefully, and whether you go through your accountant or people like us or somebody else, but as long as you're going through it, making sure that you're being thoughtful about it so you can get every dollar possible. One thing that we are recommending to people is to open a new PPP bank account. So when you get your funds, you have a clean account and you can show a trail of exactly what you paid out of those money. So that way you have an easier time when you get to that forgiveness side. So when? Apply now. Everyone's good. So go forward and apply. Go to your bank. The EIDL, you can apply for yourself through the SBA, but as far as the PPP, you actually need to go through a lender. Typically, if you already have a lending relationship with your bank, that's the place to go. There are other organizations out there that are willing to take on new customers, but it's really difficult to find those people right now because of the current backlog of loans. So these are just some things to also be considering when you're applying, and also, again, on the side of forgiveness when you're looking to get a PPP loan. So part of the application, and we actually have an application that we're going to get to later, as well as a promissory note, so you can kind of see what you're agreeing to, and then again, what you're agreeing to as far as the loan is concerned. So again, the PPP is a loan. It is a forgivable loan, but it's still a loan. So you're still signing a promissory note with the bank. And in that, you're certifying in your application that the current economic uncertainty makes this loan necessary to support ongoing operations. There is no guidance regarding what those words mean. I think we can all agree that there's current economic uncertainty. No matter what, we just don't understand what that's going to mean in terms of forgiveness and applying for the PPP, if that's something that it could possibly be an issue for a firm. It's something that we're going to want to make sure that you're thinking through carefully. The funds need to be used to retain workers and maintain payroll or make mortgage, lease, and utility payments. Borrower will not receive another loan under this program during the period of February 15th through December 31st. Borrower will provide to the lender documentation that verifies the number of full-time equivalent employees on payroll and the dollar amounts of payroll costs, covered mortgage interest payments, covered rent payments, and covered utilities for the 8 weeks once the funds are dispersed. So one thing to also keep in mind is that sometimes businesses are already in a lending relationship where they have a loan and they've agreed not to take out additional lending, or they've agreed to certain covenants. You want to make sure that all of those are still in place when you're applying for this program. So other things to think about is that loan forgiveness will be provided for the sum of documented payroll costs, covered mortgage interest payments, covered rent payments, and covered utilities. All the information the borrower provided in its application and all supporting documents and forms are true and accurate. Making a false statement to get a loan into this program is punishable by law. Obviously, we're all lawyers. We know to be really careful when you're signing forms, but just to understand that there's going to be increased government scrutiny on these programs. Katrina and TARP showed a lot of fraud, and the government is trying to make sure that those types of problems don't happen again. They tried to close all those loopholes while doing this, but they did it in 10 seconds and provided zero guidance. So it's something just to be aware of as you're sending these applications, that you're doing everything in good faith. So again, the loan application requires you to certify that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. The legislative history on the bill is unclear if this prong will apply to a small business or will guidance be issued at some point to limit the forgivability of the business where operations were able to continue. So, just kind of restating my point earlier. So you definitely want to review prior loans, financial statements submitted to make sure that all your representations are consistent, or you'd be able to defend any substantial differences. If you've applied for a loan 6 months ago and everything is rosy and now all of a sudden things aren't rosy, make sure that your numbers are all lining up and it's all accurate. And if not, if they don't line up, why, just make sure that you're prepared there. And the idea here is just, if you are ever audited, to make sure that you're in good shape, that you've gotten all of your ducks in a row prior to even submitting your application. So there's some advice out there right now saying that if you say that the economic climate being uncertain in your situation, if it's not uncertain, could be a violation of the False Claims Act, and that prosecutors may be going so far as prosecuting firms. I've seen that there's going to be intense scrutiny on law firms, financial firms, and places like that, where they believe that there may not be as much of a hardship as other types of businesses. Again, all of these are just to make sure that when you're applying, you're doing so with the advice of either an attorney or an accountant or somebody who's kind of going through the documentation with you and making sure that what you're presenting is proper. There's other problems possibly on the application. You're stating that whoever's signing the application is accounting for the veracity of the document. So if I'm saying that Peter is a 20% holder in the business and he doesn't have a criminal history, do your due diligence and actually make sure that Peter doesn't have a criminal history, at least something that could be easily checked, like on Maryland Judiciary Case Search, Google, that kind of thing, if you're assuring to that not being the case. And something just to kind of keep in mind, if you're a company that has 482 independent contractors and 100 employees, make sure that you've talked to somebody about whether or not those independent contractors could technically be classified as employees and may kind of bump you out of this classification. I think this one's pretty obvious, but always good to say, beware of any appearance of self-dealing. Be careful with any related party transaction that could arise suspicion. Again, these types of loans will be looked at and have some scrutiny, so make sure that you're doing things as proper as possible. So fraud hotspots during the PPP process. So things that can arise to an investigation is through the application. If circumstances were really unclear and then all of a sudden that those things change, does that change whether or not you're still eligible for this program? How you spent the funds, responding to government questions and updates, responding to audits. It doesn't end once the application is submitted. If anything, I would think that the forgiveness side of this is going to be more complicated than the application. The application is pretty simple. But the forgiveness side, and that's the part that most people are interested in, is the part where it's going to create the most uncertainty, but the biggest, the most complexity, to make sure that you're getting all the dollars that you're eligible for, but to make sure that you're doing things properly as well. So again, no one knows the level of scrutiny for the forgiveness or later audit of the program, so be mindful of emails regarding the program. Avoid using terms like free money. Be thoughtful regarding where the funds will be utilized. And I believe we're back to Peter.
Yeah, so sample promissory note provided. There's just really one thing that we wanted to point out that we thought was interesting reading through this. And yeah, there you go. So it's page 2 on here. Says borrower agrees to promptly pursue forgiveness of the loan represented by this note. Borrower will apply for loan forgiveness. Borrower agrees that it is aware that PPP loans may be used for payroll costs, mortgage interest obligations, rent obligations, utilities, and any other interest payment on debt obligations accrued before February 15, 2020. SBA requires 75% of the loan to be used for payroll costs, while the remaining 25% can be used for other expenses. So we thought that was interesting. I mean, certainly, and Rebecca's mentioned it a couple of times, this is a loan that is potentially forgivable. But in this promissory note, the borrower is actually agreeing to pursue the forgiveness and agreeing to pay, the 75% toward payroll, do the things that you need to do to be forgiven. And if I can, just real quick, I don't know if we lost a slide or what happened, but I do want to mention that there is language in the CARES Act that may be a safe harbor for some of these forgiveness issues. So the issues with FTE and the issues with a reduction in wage beyond 25%. There is language in the CARES Act that says something to the effect of, if you fix these issues by June 30th of 2020, then we're not going to look back at what happened basically between February 15th and April 26th, which is 30 days after the enactment of the law. Some commentators have read that to suggest that it is a situation where they've deemed to have been employed for that time, or they have been deemed to be at the appropriate salary level. I'm personally not there. I think we still need to look for guidance from SBA to understand exactly what that safe harbor, that cure provision actually means. But be aware that there is something out there suggesting that you can fix some things by correcting your FTE and your wages by June 30th. Hope to see more from the SBA soon on that.
Rebecca, once again, you're muted.
I suck at this. I apologize. Okay, so one other item to mention is there has been a recent FAQ that was issued that states if you've applied for a loan and guidance comes out after your application has been processed, that states something specifically in your application was incorrect, you are not required to amend that application, which is pretty unique in this type of environment. Things that Peter and I deal with, usually you always have to amend if there's a mistake. So I think everyone's realizing that without guidance coming out, people are doing the best that they can in getting this information to their banks to get funds to be able to keep their employees or to pay themselves, to pay mortgage and utilities, and to keep the businesses operating, during this period of uncertainty. And that if it comes out in 3 weeks, and we don't have no idea when these things are coming, that disputes that you're not going to be penalized. So this is the actual application form. I don't know if most people here have already applied or they're looking to apply, but there's some things that we did want to point out that were not discussed in the CARES Act, but are on the application and actually make you ineligible for the relief offered if you satisfy any of these requirements. So some of them are if the owner of the business has filed for personal bankruptcy, that makes that business ineligible. So that's affected some of our clients. Peter and I do tax controversy where some of our clients are in bankruptcy. There's a number of different experiences and reasons why, but their personal bankruptcy is actually hurting their business, not able to get their employees this type of protection, which seems to kind of fly in the face of the purpose of the CARES Act. I'm not sure if this is because typically you would need a personal guarantee, although you don't for the PPP program. So we're not necessarily sure why it's there, but it is there. And if you check the box, you are no longer eligible. And I'm sorry. And again, this is explaining that you have to check the box. It's current economic uncertainty, that you're required to request the relief granted. Just to kind of continue to drive that point home, that that's what you're agreeing to under penalties of perjury, that this is your assertion, that is correct. And then we had wanted to discuss also, so a lot of the questions have kind of come through regarding sole proprietors, single members, LLCs, which I'm sure is affecting a lot of smaller firms right now. And if you're a single member LLC and you're reporting your income on a Schedule C of your 1040 income tax return, your income is subject to self-employment tax, and you are able to apply for these programs. You're allowed to apply for the PPP as well as the EIDL. There's the $100,000 cap, but that $100,000, and I think Peter mentioned this, but just to kind of highlight it, doesn't include your healthcare costs or your retirement costs. Those are non-monetary benefits. So maybe guidance will come out tomorrow saying that if you're a single member LLC, you can't pay for your own retirement out of these funds. But as of right now, that's not the case. And we're aware of people applying and having that application be accepted via partnership, where their retirement was included, the applicant's retirement was included, and the applicant's healthcare costs. So all of that goes into strategically what you're requesting in your application and what's able to be forgiven. So one question, I'll send this over to Peter, is I'd like the speakers to specifically address how as a solo in my home office with a Schedule C can apply, plus how do I account for income that comes from clients who don't give 1099s?
Right. So a little bit of this is still unclear. We don't know exactly what documentation is going to be required, and a lot of it is going to be bank specific. Correct. Not everyone is giving you a 1099. So my recommendation to you is to reach out to your banker as soon as possible, figure out what documentation they're requiring, and work with them to establish what your net business income is.
I remembered. Exciting. So another question is, what is SEP IRA, simplified employee pension counters retirement for self-employed, not subject to the 100K limit?
Oh, I don't think that's clear yet. Truly, it is an expense of the self-employed entity or the single member LLC. So potentially, yes. I would want to see some guidance from SBA. I think that would be an interesting one to understand.
But I think you could put it in the application, and as long as you're keeping the funds that you've received isolated, if guidance comes out and you don't feel comfortable requesting for that amount to be forgiven, you're getting, if the application goes through, and for all of these, obviously, take what we say as a grain of salt. We're not lenders. Your bank is going to give you an application request for documentation, and they're the ones who are going to be accepting or rejecting this application. So that's going to be the most important item. But if you include it now and then just don't request for the forgiveness and take a 1% loan later, that's still not a bad deal. And you don't know if guidance does come out saying that that's completely appropriate, then you know that you've requested as much relief as possible. Now, obviously, everyone's going to do what they want to do differently, but that's something to kind of keep in mind. As long as there isn't guidance on it out and retirement costs are allowable, I would at least put it in your application, discuss it with your bank, make sure that everyone's good with it, but I don't see a reason not to include it. All right. Next question to Peter. Must an independent contractor of employees, in order to be eligible to file for a Paycheck Protection Program loan?
I'm sorry, I didn't catch the beginning of what you said.
That's okay. Must an independent contractor have employees, which I think we've covered.
Oh, no, not at all. And in fact, in many of these situations, you're not going to have employees, and that's the distinction between the program, again, that opened up on April the 3rd and the one that opened up last Friday on April the 10th. So independent contractor, there is no expectation that you have employees.
And Peter and I obviously are checking around the class to check to see if the guidance had come out, and everyone is just really disappointed in the lack of information. People are just feeling like independent contractors and sole proprietors are just kind of getting left in the dust with this because they just haven't had the time or haven't actually put out anything to kind of help them. It's the same application. You're supposed to just use it, roll with it, and use some documentation to apply for your lender. One question that hasn't come through yet, but my clients have had the question, so I figured I'd mention it, is what if you haven't filed your 2019 return yet? What documentation, since you don't have 941s to include, or W-2s, like what do you use to kind of prove that point as far as what your income is? And different banks are requiring different ways to substantiate that. However, I know some have requested just for payroll statements, just for like distribution. Some have said bank statements are okay. So it really depends on your lender, but just because you haven't done your 2019 return, don't let that stop you from looking into the program, because as everyone's aware, once funds go, even if the new funds are appropriated at some point, they're all going to be gone. And so waiting to get a return to be complete may be just not be practical.
And just to mention again, there is no requirement that you use the calendar year. You can use a rolling 12 months here as well. So maybe a tax return is helpful, and that gets you to proving income quicker. But if you're in a situation where the 12 months is better, then by all means do that.
All right, so there's a question. Is it true that you can't apply for both PPP and EIDL?
No, you can do both PPP and EIDL loans. And if your business is such that you need it, it may be a really good opportunity for you. The one thing to point out where these two programs don't necessarily play nice with each other is with that $10,000 grant, or up to $10,000 grant that Rebecca discussed earlier. If you get that grant, and as a grant, it's you don't have to pay it back, that would reduce the amount of forgiveness you would be eligible for under PPP by that amount. But otherwise, if you need a disaster loan and you're also need to use this Paycheck protection program, by all means, go for it.
Okay, this is a great question. So I've continued to pay my rent and utilities as they come due. Should I stop now and defer the payments until I see if I'm going to get this loan and funding? So we have other clients doing something similar as far as to see if they can include it in the forgivable part of the loan. There isn't guidance out there that says you must pay every bill as it comes due before you get your funding. That's not part of this. We know, at least some of my clients I know have deferred paying their rent in hope their application's already been approved, in hopes that they can use the funding once they get it. Part of the strategy in getting these loans is when they're going to, when the 8-week period is going to begin. And so if there's something that you can, not delay in paying, but if you know that there's certain expenses that you could include, and that once that 8-week period begins, the loans are required to come within 10 days of the SBA application. Although the EIDL, I think, was required for 3 days, and no one's gotten their money yet. So hopefully the PPP comes sooner. But it's just something to kind of think about as far as strategically what can be forgiven and how you should kind of time your payments for things. If you have a utility bill that gets issued on April 16th and is due May 16th, there's nothing wrong with paying your bill closer to the due date rather than paying it the moment you get it. I don't think anyone's requiring you to do that.
The only thing I would say is just keep in mind that for the forgiveness, the requirement is that you pay at least 75% toward payroll taxes, or payroll costs, not taxes. And the remaining 25% would be the utilities and the mortgage interest and the rent payments and that kind of stuff. So keep in mind that the public policy here is to keep people employed. And so you want to make sure that your primary expenses are going toward payroll costs.
Okay, this one is for Peter. Are non-employers eligible to participate in the PPP? For example, LLCs that own rental properties where owners' members do not have self-employed income, just distribution.
Right. So I think what we're hearing is that if you don't have self-employed income, you're not going to be eligible for the PPP program. So that really is the dividing line here. And we referenced it earlier where we suggested that a partner in a partnership who is receiving guaranteed payments or even that pass-through income that is subject to self-employment tax may be eligible for this PPP program. Compare that to a situation where someone, a stockholder in an S Corp, gets paid a reasonable salary and that pass-through income is not subjected to self-employment tax, you're creating a difference between those two. So something definitely to keep in mind. If it's not subject to self-employment tax, it's very unlikely that this is a program for you.
One thing to keep in mind for those types of businesses is you are still eligible for the EIDL. So if you are allowing your tenants to take delay in payment or offering other types of relief to your tenants, you should still be eligible for the EIDL and the $10,000, well, $1,000 grant if it's just you, or just in general the loan. If something like that is attractive to you, it's still an option. And just one other thing to kind of piggyback on what Peter was saying about the S corps. So a lot of law firms are LLCs, and they either choose to be taxed as an S corp. In order to properly have an S corporation, the owner's required to take a reasonable salary. And a lot of times we see people come in the door where their salary may be less than reasonable or less than what we would advise them is reasonable. And the reason they do that is to avoid or to pay less payroll taxes and to only pay withholding on their income, or to pay withholding on the majority of their income. That strategy has just bitten them all pretty hard, because those distributions they're taking on their K-1 is not subject to self-employment tax, like Peter said, which is the reason they've been doing it. But it also means that you're not eligible to take those monies and apply for the PPP on those. So it's important, if you have clients that are S corps where they weren't taking a reasonable salary. I mean, I have clients that weren't taking a salary at all, that they now need to think in a different way in order to kind of go through this process. So just something to keep in mind, that the S corps, the wages are the only part of them, of the income that's subject for the PPP. All right, next question. Can you get the EIDL grant and not get an EIDL loan? Is the EIDL grant dependent on showing economic distress relating to the COVID-19 crisis, or a one-time grant for those that apply independent of the showing of economic distress?
Yeah, so you can apply for the EIDL grant. Yes, I believe the certifications would be the same, that you need to be experiencing a hardship related to the disaster. But yeah, there's no requirement that you go beyond the 10,000.
Okay, there's a question. How long until the loan is dispersed after uploading all the required documents? We're bleeding money. We are hearing that from people every day. Like, what is the holdup? We're trying to keep these people employed, under the good faith that we're applying for these loans. We're expected to get them so we can keep them employed. But we're just not seeing the funds. And make sure when you've submitted all of your documentation that your bank has now submitted that application to the SBA. My understanding is that each bank has a limit of how many they can apply for each day. And they're kind of doing it in order of, VIP to less VIP. And so if you feel like you're not getting the attention that you need, I would certainly be calling them every day. I mean, I would be on them, because the money could run out, and it's certainly not your fault if you've already submitted all the documentation. Once the application's been approved, you should be getting your promissory note, and my understanding is that it's 10 days, and I think that's 10 calendar days, not 10 business days, for you to get funds. Okay, Peter, how does 75% apply to sole proprietor using Schedule C and not paying salary?
Right. The short answer is we don't know. We could speculate as to what that may mean, but I think that's probably the biggest area that we're looking for additional guidance from SBA to understand how to know what is a payroll cost as it's defined related to a sole proprietor independent contractor.
And again, just maintains the importance of having a separate bank account. So that way you're clear once things come out, so you're not commingling and making things more complicated. Okay, I have another one for Peter. If I reduce salary by less than 25%, but maintain FTE hours, it sounds like I will not be penalized on loan forgiveness. Will I be penalized on loan forgiveness if I furlough some employees 1 day a week and reduce their pay by 20%, even though the net effect is less detrimental to employees' income than if I reduce salaries by up to 25% but have them work full-time?
Right. So the FTE analysis is done per each payroll. So if you can get through a payroll without having a change in the FTE and you can average those out, then potentially you don't have issues. Certainly where you're saying, and Rebecca, how far up is this? Will I be penalized? Here we go, I found it. 1 day a week if they reduce 20%. Right, so the bottom line is that if the net effect of what you're proposing is to not reduce wages by more than 25% for those 2 test periods, and then the 2 test periods for the FTE, then you would be okay.
All right, so the next question is, does the bankruptcy exclusion include a prior discharge bankruptcy or only a current active bankruptcy? And I believe it's just current. Are you currently involved in a bankruptcy? Which leads me to believe that it is like typical language they include on an application form, usually due to personal guarantees. Not understanding why it would still be included if there is no personal guarantee. But here we are. Next question. Do you know when SBA will release underwriting guidance for issuing loans to independent contractors who do not have a business checking account as of 2/15/20?
So the first guidance came out on April the 6th. It included, I think, 15 FAQs. They added two additional FAQs on April the 8th, and we've just been hitting refresh multiple times a day since then. So no, I don't have any particular sense of when SBA will release additional guidance.
Okay, another question is it your opinion that if your firm's income does not measurably decrease in the immediate term, the loan will not be forgiven? For example, my income is a pipeline, so my loss will not be visible for several months. That is not my opinion. No, I think if you believe that there will be a shift in your income, even if it's not immediate, and there is documentation to support that belief, I don't see why that loan would not be forgiven. I think I would need a lot more information to kind of make that decision. And again, you know, not to beat a dead horse, but lack of guidance is really putting us in a tough spot here. It's just things to think about. Our understanding is that the purpose of the bill is to make sure that people are staying employed and that people who are self-employed aren't getting killed because they can't do other things that you know, wage employees can do, as far as unemployment and things like that. So I think it depends, but it wouldn't discourage me from applying for the loan and applying for forgiveness. I would just make sure that I would include as much documentation as possible. don't know if you have anything to add.
Yeah, I mean, I think what our firm's opinion is that this isn't a free money cash grab, and our counsel to you today would be to really think critically about these issues, be prepared to articulate, what the economic harm is to you and how it is affecting you, how this COVID crisis is affecting you. I think that if there are multiple owners, that you all need to get together and talk about these things and really understand and take seriously the certifications that you're doing in the application.
And again, these are things that is helpful to have help on, rather than doing it yourself. Your accountant, your lawyer, your whoever that you trust in this realm, but somebody to kind of go through it with you and help put your package together and give you some advice. It's worth it if it means that you're going to, one, avoid scrutiny, but also to get your loan forgiven, or the most of your loan that can possibly be forgiven. Another question's about Wells Fargo Bank. Apparently Wells Fargo's indicating it's not accepting applications. Apparently they're like on some weird cap because of all the fraud they had like a couple years ago. And for some reason they're making a big spectacle about it. It's something I wouldn't necessarily advertise, but here we are. There are other people who are taking applications, even if you don't have a business relationship with those. You can always email me or Peter after the presentation, and we can kind of go through just some people that we send people to. We're not like getting a cut of anything or anything like that, but we can help you rather than kind of list a bunch of places to go. We're happy to do the few minutes of free time. It's not a big deal. My accountant provided inaccurate information to submit for my PPP application. The difference is about $2,800. When can the correct supporting documents be submitted? I would just say go to your bank and ask about that. If your application's already been approved, I think it's going to make it trickier, but either way, your bank is going to be the one who's going to be able to tell you how to correct any kind of error, whether it's in your favor or in, not in your favor. Those are the types of people that can help you. They're the ones guaranteeing the money. Okay, I have a general partnership. I applied for PPP, but only requests the supporting documents 940 and 941s, which means it ignores the partner's payroll. How do we include the partner's payroll? Is there a different PPP form? You want to take this one?
Yeah, I mean, I think the partners can reach out on their own and apply for the PPP in this situation. K1 is reporting pass-through income. It's reporting guaranteed payments. That would be an appropriate way to approach that.
And we've actually seen banks do things completely differently. We know of one firm where they included partnership income in their payroll application, and we know another firm that did the exact same thing, and one firm's application was accepted and one firm's application was rejected. I promise I won't say it again, but due to lack of guidance, it really makes it difficult, not just for you, not just for people advising like me and Peter, but also it's really tricky for the bank to know what's allowed. They're the ones that are on the hook for this. Why the banks have had such a trouble, rolling this out. Like I know M&T took a few days before they were even accepting applications because they were trying to get like their ducks in a row to make sure they had their process in place. And people are reading the act differently and interpreting it differently, and therefore, their applications are vastly different. So how that's going to go, later on, no one really knows. I think we've addressed all the questions I can answer. I don't know the 501c7 one, sorry. If you are unable to open a separate bank account using emailed fax documents, is it appropriate to place the funds received into the firm IOLTA trust account? No. I would not do that. Do you have any advice on that if you can't open a new account?
No, but I agree that it's not appropriate to put into a trust account. I'm curious as to what the issue with opening an additional account would be, but I would do something different.
So just to be clear, it doesn't need to be with a different bank, just a different actual account. So if you have a Wells Fargo account, they should be able to set you up with a new number where you can just have a PPP account. And it's not that you're required to do this. No one's saying you're required to do this. I know plenty of people who aren't doing this. We just think it makes good sense when you're trying to then again, in that promissory note, you're agreeing to apply for forgiveness. It doesn't say like if you want to. That's like part of your obligation to the bank is that you're going to try to get this money forgiven, and the bank is actually trying to get what they think you will get forgiven ahead of time before you. I mean, this is all just, race against time. Everyone's trying to get the money back from the government as quickly as possible. And so we just think it makes it easier for you in the long run if you have to defend yourself. And also if you're skirting lines on anything, if you're worried about that 75%, then you can talk to your accountant, you can talk to us, you can talk to whomever about like, okay, is it appropriate for me to issue a bonus right now? Is that allowed? Is it okay for me to hire a family member? Is that allowed? Like, what can I do and what can I not do to make sure that I'm within the rules, but doing everything to, within my power to make sure that things are forgiven? And those are questions that, we get fielded all the time. All right, I think we've answered everything. I know we're a little bit early. If anyone has any other questions, we're happy to answer them. But if not, do you have anything to kind of close with? Peter?
No, I mean, look, it's regrettable that SBA hasn't come out with additional guidance. When we started putting this program together, we were really hopeful that we'd be able to talk through some very specific points with self-employed independent contractors, and it just hasn't come together yet. So, whether it'll be us or somebody else, but I would imagine that, we'll stay focused on this and be providing updates as they come out.
Okay.
Thank
It
you
doesn't
so
look
much.
like, it doesn't look like we have any other questions
Okay,
submitted. So this is Andrea Terry with the Maryland State Bar Association, and I want to thank Peter Hokibo and Rebecca Shepard from Frost Law for participating and taking their time to put together today's presentation, and thank all of our viewers and attendees who took time out of their day to join us, and especially those of you who submitted questions. We welcome those questions. And if any of you have suggestions for additional webinars on different topics or this topic or any other specific topics that you'd like to see that you think would help your practice area, please go ahead and email those to us. And we'll be sending out a survey to attendees, and so you'll have a chance to let us know some feedback on that as well. And again, thank you to the Frost firm, Frost Law, and Rebecca and Peter for your time today. And I wish everybody well. Take care and thank you.
Thank you so much.
Thanks, Andrea.